Heart beat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I haven't met. I've been down where the doubt is loud. I've been lost in the digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantees, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway. Late night glow from a silent screen. Heartbeat loud in the in-between. World asleep but my mind won't rest. Standing right on tomorrow's edge. Numbers fall and the candles shake. Every risk is a step I take. No applause and no safety net. Just a promise I have. I've been down with it loud. I've been lost in a digital crowd. But the signal cuts through the noise and it pulls me now. I'm standing on tomorrow's edge. I jump anyway. No guarantee, but I'm on my way. If I fall, I rise. That's the game I play. Tomorrow's edge. I jump anyway.
Right, legends. Hope you all had a fantastic weekend. It's Monday, getting ready for the week. Trading opportunities. Oof. A lot to discuss today. Bitcoin is an absolute critical level at the moment. What can we expect? Are we going to absolute tumble here to the downside? Can we claim the high again at $70,000, $71,000, round about there? And right, let's tackle. I saw Andy did a live stream yesterday, so you guys should be up to date with what is happening, what Andy's also looking at, and myself. I already shared a couple of scenarios here inside of the community, all the updates that I'm looking at, and we can see if we can maybe find a couple more inside of the live stream. And obviously I will keep on updating the community throughout the day, even also when I take a trading opportunity, because I'm still in my long, guys. I'm still in my long. Got stopped out of the short, added a little bit to my long, and now the question, can we continue? I think my entry is exactly where it needs to be for this decision moment. Okay, it's protected. If I get stopped out, I will get stopped out with profits. I already took a little bit of profits as well here at the highs. Okay, but I did not want to close this trade because I know that there's a bullish case scenario that we need to discuss, where price forms a higher low and we continue to the upside. And the question is it time? Is it time for the correction to be done? Okay, are we going to find upwards momentum here and just continue? Right, we need to analyze those probabilities, those situations. I think the beauty about this trade that I took over here is that I don't have to try and find a long or speculate on a long. If I get stopped out, I get stopped out with profits. As you guys can see over there, I get stopped out with profits. If I'm wrong, well, then I'm going to have to look for another long entry, but there's some interesting levels to the downside that I'm still keeping in mind. Man, I wish I caught the short over here, but it was weekend, guys. I really try and take a break from the chart over weekends, but there was a nice little shorting opportunity, and there could be another short that I will jump into if I see the reaction that I like. But now we need to discuss, legends, remember to smash up that like button. Okay, let me put the music a little bit softer here in the background. There we go. So that you can hear it, but it's not distracting. Okay, because I know that there are a lot of people that like to watch these little updates on 2x speed after the fact. And when there's loud music in the background, it can become a little bit disturbing. Okay, so I'll put it there gently, lightly in the background. What is disturbing about this structure? Okay, the one thing I just have to point out, I know that there is a lot of liquidity above where price is at the moment. It makes sense to do a little bit of a short squeeze to the upside. So I will talk about the bullish case scenario. Hence, I'm in this long. I will talk about the bullish case scenario. But what is disturbing? Let's talk bearish for the moment. What is disturbing about this structure? Okay, I've seen it before, and I'm sure you have seen it as well. Okay, what is disturbing about this structure where you form a lower high is not so long ago, we did the same thing. Not so long ago, like, you know, yeah, around a corner, we did this. Do you guys see the similarity? Okay. Lower high, and then we fell to the downside. Right? Now we have the same structure, high, lower high, and now the question is, what is happening here more locally? Can we expect momentum to do at least that? Okay, because in all honesty, based on all the scenarios from a higher time frame perspective, and maybe I'll spend some time on that today as well, is that there's not a high chance from a technical perspective to get this. But there is a chance to get that, because the biggest move that caused the most damage already happened. From an Elliot wave perspective, all the scenarios point to, even if we claim the low, there's still a high chance that you're not going to capitulate to the downside. So even if we fall here to the downside, it's fine if we smack this level and get another bounce, because there's a couple of scenarios that points to a bounce in this zone, even if we take the low, but not a capitulation to the downside, because a lot of damage has already been done. We are at extreme fear. Okay, from a structural perspective, it also doesn't really make sense to get another leg like this to the downside. Just as yet. It can still happen, but I don't think it's time for that move yet. Okay, now we need to talk about these scenarios. And guys, you know, I always talk about the community, the updates that I provide. And if I do jump into a short or maybe add to my long position during the day or the rest of the week, this is where I do it inside of our Telegram community. You can DM me the word access. Okay, down in the description, you can DM me the word access and you can get free access to our community. Okay, you have to use this link, guys. You have to use this link and then you'll get instructions on how to join the community. Okay, so now let's carry on with the technical analysis. So I just had to point that out. I've seen this before. Okay, and will history repeat? Will history repeat and fall? Now that is the question, because this can also be, okay, now let me go into the structure. Maybe you're on the 15-minute time frame. Let's look at this structure. Okay. You have the potential. What did I do here? Right. Today I am bearish. Dewald. I see a local 5-wave impulse down on the 5-minute. Yes, we're going to talk about that. We are going to talk about that. I also see a local impulse down, but I also see an impulse up. So it's decision time. It's a critical moment for Bitcoin. So let's just look at the entire structure. This can be counted as an A. 5-wave A. This can be counted as a complex WXYB. And this little structure here to the upside can be counted as a C wave. And this is what we call in Elliot wave theory as a running flat, which basically, well, I can't actually call it a running flat because B didn't tap a flat target, but basically it's a rare corrective structure where the high of C does not take the high of A. It's usually a very difficult trade to get into, because when we created this little nastiness here to the upside, I also told everyone this is a very difficult short. The most common flat corrective structures is an A, a three-wave A, okay, a B flat that takes the low, and a C that takes the high. For me, those are the best ones to trade, because you get acceptance back above, you move up. So there's your long, stop goes below the low, you ride the momentum up, and usually the high is a profit-taking area, but you guys know me by now. As soon as I start hitting resistance to the upside, I already start taking profits. Exactly what I did with this long. Okay, I took profits already here at the highs. I already took profits from this long. I added slightly to the position, and now we're going to see if we're going to get momentum to continue here to the upside. Okay, they are not easy to short, unfortunately, but they are, luckily, they are also rare corrective structures. The one thing that does count in our favor for the bulls, okay, when I say in our favor, the one thing that counts in the bulls' favor, let me maybe rephrase it, is that it is very rare, extremely rare, okay, to get the same corrective structure twice within the same structure. So if you, for example, had a running flat there, basically the corrective structure did not take the high, and now you have another one that does not take the high, it is extremely rare to form the same corrective structure twice within the same structure. It's very rare, guys. There's always that rule of alternation. You get a long, complex corrective structure, and then you get something else in the next corrective structure. Okay. Right, now let's talk about this little structure, and maybe I'll leave the higher time frame analysis for either later during the stream, and we'll see how much time we have, or I'll do it tomorrow, because there's so much time. The higher time frame analysis will still be valid tomorrow, next week, okay? It will still be valid. But I think what most people are interested in now is trading opportunities and what could happen this week. Okay, so it has to be said also, okay, let's just stick to the structure for now. If I take a trend, a volume profile for this entire range from the low, okay, and there's a couple of ways you can draw it. You can also take it from this little consolidation area. It doesn't really matter. You just want to get the volume in there. But the one thing to point out, okay, is that we have lost the point of control. And this was the resistance area that I highlighted since last week already. I said, guys, we need to get above this level and we need to hold it. So price consolidated here. And by the way, for those of you that took that trade with me on Friday, it played out. Do you guys remember this trade that I spoke about in Friday's live stream? It played out. Price went higher, but my plan played out to perfection. Okay, do you guys remember we were speaking about a 1, 2, 1, 2, and I think price was here where I entered on BTCC, and I said, guys, this low should not be claimed. If it's a double 1, 2, you don't want that low to be claimed. Price should start accelerating to the upside, which it did. Okay, so for those of you that did take the trade, and for those of you that watching the stream right now that did take the trade, well, it played out to perfection. So I just wanted to do a little bit of a recap on the trade that I took live here on my BTCC account. It played out. Okay. Right, I actually closed my position, yeah. Because it was getting weekend, I don't like to leave trades open for the entire weekend. But for me, this was a day trade. This was just a small little day trade. As soon as price moved up, I protected position, just managing my trade. And then I also highlighted to the commission, to the community, as per the live stream, this is a great profit-taking area. Okay. I don't care where the price went higher. Guys, you need to understand, okay? Because I sometimes get messages from people that laugh at me and say, well, you took profits and price went higher. I don't care. I have a successful trade. I managed it. I booked profits. That's what matters. Did you win the trade? Not did price continue, or did you get stopped out? And if you did get stopped out, how did you manage your risk? For example, okay, I'm managing my risk here. I already took profits. My position is protected. All you can do as a technical trader is manage your damn trade. That's all you can do, is manage your trade. Take profits, pay yourself, protect your position, protect your capital from the market makers. Okay, Right, so that trade played out, by the way. Okay, for those of you that did take the trade, congratulations. I hope you took profits, and we will analyze this local structure in a moment. So what is bearish at the moment is you can see that we have a point of control. Okay, if I take this out, you can see this is where the highest amount of volume was traded since we formed this range. Okay, so it doesn't really look good for the bulls at the moment that we almost tapped the value area high, because, you know, you tap the value area low, you find upwards momentum, you tap the value area high, you lose the point of control. And there's always, from a range trading perspective, when you lose the point of control, there's a high chance that you could go down and tap the value area low again. And so that the range just continues. That's range trading. So the probabilities for the moment is not in the bull's favor, because we are trading below critical resistance. Okay, and you can see that price lost it. It tried to break through. Maybe it's going to try again. Okay, but for a sign of strength, price needs to start trading above that level and start closing some candles above that level. For now, this is weakness, guys. Ladies and gentlemen, there's nothing bullish about trading below the point of control, unfortunately, unless the bulls can step in here and push price up. Okay, and then I will discuss some of the, we're going to analyze the structure in a moment. And remember to smash up that like button if you do enjoy the content here on the live stream. Okay, so let me put my little box back. This is why I have this resistance, and you can see it has been pretty well respected so far throughout this range. Bounce, bounce, lost it, rejection. Okay, then we came back, consolidated against resistance, broke out, sign of strength, but now it needed to hold this level, and now we're trading below. Now there's nothing bullish about trading below resistance, unfortunately. It's just technically there's nothing bullish about where price is at the moment. I know we want price to continue higher, but it's not about what we want. We need to trade what price gives us at the end of the day. Okay. Right, so for those of you that took the trade here to the upside, congratulations. If you got in a little bit lower, you know, like I did here at the lows, well, I basically took the trade over here. I just added to my position to make sure that it's still protected. I do think that the bulls still have a chance for a bounce. So keeping it very simple over here. If I start switching on, let's say, the daily levels, okay, you will see that we have two daily levels, one above, and guess what? One at exactly the value area low. Now that is interesting to me, okay? Because although it looks bearish, remember what I said from a range perspective. You lose the range, you go back to the top, okay? For bullish momentum, you don't want to lose the point of control. We've lost the point of control. So the next best area for a long is to let price come back down to the value area low. Form a higher low. Now that looks way more interesting. Maybe a nice little trend. It breaks exactly like it did. Yeah. Okay. Remember, there was a little bit of a fake out, but eventually it broke out. Okay. Almost claimed these highs. Maybe the same scenario could play out over here, where the bulls protects this low. It forms a higher low. It stays within the range and it goes back to the top. Okay. Maybe rejects, breaks through, and it's just a day. Guys, I'm just looking for a day trade over here. I'm not looking to go to $150,000 from here. Okay. Now, you know, let's just keep it realistic. I'm just looking for a day trade. That's it. Okay. Maybe longing opportunity if you want to scalp. Shorting opportunity. You see the rejection again. This area, unfortunately, is busy forming resistance. Okay. Usually when you tap into a consolidation area, it builds resistance. That is what's forming the point of control. There's a lot of volume in that area. So if price does get a bounce over here, this again becomes a profit taking area, and also a profit taking area becomes a shorting opportunity, but not really interested. Okay, we'll see when price gets there. Okay, because there's a chance for a higher low and continuation, and finally you break out. Maybe you smash this point of control, bounce, exactly what we wanted to see that didn't play out, and then we have continuation here to the upside. Okay, guys, I will go through some comments in a moment. I just want to get the structures and the analysis here out the way. And then the way that I plan to structure the live streams going forward is that I'm first going to start with all the technical analysis. And then towards the end of the live stream, I'm going to go through comments. Because I saw that, you know, for people rewatching the stream that don't have time to watch it now, I think it's great for them just to get all the content and the analysis done, and then I can go through the comment sections towards the end where people can just skip and they don't have to watch through that. Okay, so now, from a structural perspective, keeping it very simple, we were at the bottom, we now were at the top, we're trading below resistance. The next logical area for bounce is at the value area low together with the daily level, which also aligns with the 0.786. When you take a fib from the low to the high of the entire structure, you can see, well, this is nice confluence here at the moment. You have the 786, you have a daily level, you have the value area low. So technically, this is the best area for a bounce. What I'm going to do now here on the smaller time frame, looking at this structure, is to say that, well, do we have Elliott wave scenarios that support a bounce in this zone? Or are we just going to move up from here? Okay, remember guys, if we just move up from here while I'm still in my long, I will just benefit from the momentum to the upside. If you're not on a long, we're going to discuss the trading opportunities that lies inside of this structure. Okay, maybe there's some shorts, maybe there's some longs. We'll see now when we zoom into the smaller time frames. Okay, so I do like the confluence over here. Technically, this is the best confluence. You have a consolidation area that can provide support. You have the 786, which is, by the way, also a maximum target for a wave 2. Okay, because there's also the chance for the bullish case scenario. Okay, let's discuss the bullish case scenario. A 1, 2. This is a 1, 2. Okay, it's building a nested 1, 2, double 1, 2, and you get an explosive third wave here to the upside. So definitely an interesting area for a long. Okay, that's the bullish case scenario. You basically build a double 1, 2, and price accelerates here to the upside. 1, 2, 1, 2, 3, 4, 5, 4, 5. Okay, you want to see a repeat here at the top. So this could get this structure, if it's a double 1, 2, could easily go past $80,000 and go and squeeze out all the shorts from a liquidity perspective. Guys, I don't even have to show you the liquidity heat map. It's all over social media. I see everyone posting screenshots about it. You know, there's massive liquidity in the zone. Way more short liquidations than long liquidations at the moment. So it would actually be great for a double 1, 2, and you squeeze everyone out, and then we'll look at the retracement if there's another opportunity to continue, or maybe we're gonna fall to the downside. So from a liquidity perspective, I would say, you know, it would be nice to get a push here to the upside. But we are downtrending, and the trend is your friend until the very end. And all we're playing and longing here at the moment is relief bounces. Okay, so now let me take the levels out the way. Let's clean up the chart. Let's zoom into the smaller time frames. Remember to smash up that like button if you haven't done so already. Okay, also fill the gap, the CME gap, guys. Yeah, you'll know by now that I don't really pay attention to CME gaps. It's interesting to look at them, but I don't have to use CME gaps as part of my trading strategy. I'll see if I can maybe have some time today just to see, well, where are those gaps? Okay, maybe fill those gaps. Right, so I think what is most interesting now is the 15-minute time frame. So let me take this out the way, and now let's look at this structure. What could happen here? And as per the thumbnail, as per the title that I've used for this live stream, okay, guys, it was not clickbait. By the way, it was not clickbait. Is this an impulse up? A correction for continuation, and I think that continuation can really push to the upside? Or was this that A, B, C, we done and we're going to fall to the downside and claim the lows again? It really, this structure is going to show us the way, I suppose. Okay, right, so this move up, I think the easiest way to count this move to the upside, guys, I'm not going to spend time on the 1 minute, 5 minute time frame to try and make sense of what happened here Okay, is it a double 1 2 3 4 5 4 5? Is it a 1 2 contracting diagonal 3 4 5? Guys, I'm not gonna spend hours and hours trying to figure that out because I don't have to. I just have to have my areas of confluence ready and observe the reaction at certain levels. Okay, so first scenario, let's talk about the first scenario. Okay, this is an alternative scenario, but okay, for the bulls, this is what you want to see. You have formed a contracting diagonal in wave 1, leading diagonal, leading contracting diagonal. You had a wave 2. Okay, so you basically have 1, 2, 3. Highest amount of volume is always in the third wave. You formed a 4 and another final push here to the upside on decreasing volume. Most important. So there's a chance that the impulse actually came to an end over here, not here. Okay, this, ladies and gentlemen, is part of a flat corrective structure. 3-wave A, which means that B has to be a flat. Tick, it is a flat. It tapped a flat target, it didn't invalidate itself, and now this move to the downside can be counted as a 5-wave impulse to the downside in a wave C. And this is what someone else also pointed out. Dewald, I see a impulsive structure on the 5-minute time frame to the downside. Yes, that can be your wave C because wave C's has to be 5-wave structures. Okay, doesn't have to be an impulse, but it has to be a 5-wave structure. Now the question is, okay, because now this presents a bullish case scenario where if this is the high and you have an A, B, C, this could even be the end. Because after an ABC, that could be the end of this impulse. But now this does not look very bullish. Because after the end of something, you have to count a 5-wave move to the upside. Okay, so guys, just to keep it simple, maybe on the smaller time frame, you can count a 5-wave move here to the upside. Okay, maybe this is an ABC, and maybe this is another 5-wave move. Maybe this is the correction, so maybe you're building 1, 2, 1, 2. Okay, maybe another 1, 2, but you're basically building nested 1, 2s and you're going to get it pop. You're going to get that pop to the upside. Okay, because when you have an ABC, that could be the end, but it also opens up the door to a W. You form a triangle in a X, and then you go and still complete your Y in a ABC, which aligns also with the 786 and the daily level, the value area low, like I've just explained. So now you guys can see why I stick around on the higher time frame first before I zoom into the local structure. So that you now know that there's an Elliott wave scenario that supports a 5-wave move, a 3-wave corrective structure, and a bounce. There's an Elliott wave scenario that supports it. Price needs to slow down. You want to see some signs of support and strength, not as price is waterfalling here to the downside. Okay, I want price to form a 3-wave structure. So the most interesting thing I'm looking at right now, okay, is for price to form a 3-wave structure. Because once price forms a 3-wave structure, I know there's a high chance for a Y wave, because a Y has to have a 3-wave structure inside of it. A, 3-wave B, 5-wave C. I want to see price slow down. You have support. You have the daily level. Should not lose the daily level. Preferably you leave wicks behind the daily level on the higher time frames, but you close the body of the candles above the daily level. That is a sign of strength. That's what I'm looking for. So it's not going to be just like you tap the level, I enter like a crazy person, and then off we go. Okay, I want to see signs of strength. If the scenario had to also play out, you could also say, well, I'm going to take it a little bit safer. Okay, I'm going to wait for a trend to form to the downside. I'm going to wait for a trend to form. Okay, I don't care what happens here. I want price to break. So I know where to put my stop loss, and now it's starting to shift momentum. Okay, so there's a couple of ways in which you can get into this trade. It's not up to me to tell you how to get into this trade. It's up to you to make that trading decision. Okay, so a lot that can happen here. So there is one scenario that supports a bounce in this zone. there's a chance, guys, there's a chance that this can be the low. And you are building up 1, 2, 1, 2. I don't know, guys. It's still such a fresh structure. And I'm not going to go and analyze this. And I know most probably Mr. Joan or Joy or someone that does Elliott wave theory inside of our community are going to count this structure, okay, on the 1 minute time frame. And they're going to show us what they see inside of the structure. That's why it's so amazing to be part of the community. If you guys want free access, link is down in the description. DM me the word access, okay, for instructions on how to join our community, because that's where the action happens, guys. That's where we enter together, exit together, look at different scenarios, talk to each other, bounce ideas around. Okay, so next scenario. Bearish scenario. Let's first talk about the bullish case scenarios. Okay, next scenario is this was 1 2 1 2s, okay, 3 4 5 4 5, okay, but basically the impulse ended over here, and this is only the start of the correction or momentum to the downside. In this scenario, the most important thing to pay attention to is that it's not time for the correction to be done. Because if this is the end and you count all of this as an impulse, well, there's my minimum requirement. And for the last couple of days, I've been talking about time and how important time is from a trading perspective. If 5 is over here and this is part of an ABC, maybe a X and a Y to the downside, well, then we're way past the time already. We can get the bounce at any time. Okay, but in this scenario, if these are multiple 1 2s, this is the end. I would still like the correction to continue. You have a 5 wave move down in an A wave. You're forming a complex corrective structure in a B, and a B can be any complex corrective structures. They can really mess with your mind. Okay, B waves are extremely complex, very difficult to count. Okay, and after your B wave is finished, you still expect a C to the downside where you form your little zigzag or your lightning bolt. And this scenario also has alignment with the 0.786. Now you guys can see how I'm starting to get confluence. It doesn't matter how I count the structure, I'm looking for a bounce in the same area. Interesting. Okay, but it doesn't mean that I'm going to put limit orders there and just go in with my entire portfolio. It just means that there's a trading opportunity. And how can I get in here with the best possible risk management so that if I'm wrong, okay, because there's a bearish case scenario, which I'm going to discuss now. If I'm wrong, I'm not underwater, adding to my position and liquidating my account or my position. Okay, I'd rather want to get stopped out here, okay, and say, okay, I was wrong. Or maybe stopped out at the 0.886, which increases the probabilities that you're going to take the low. Maybe it does that. Okay. Let me clean up the structure. So here's the next scenario. You're counting. And I must say, guys, I zoomed into the 1 minute time frame to try and see if this is an impulse. And yes, you can fit an impulse in there, but it's not pretty. I actually prefer 5 to be there. To be honest with you, a 1, 2, 3, 4, 5. It just makes more sense. Highest amount of volume in 3, lower amount of volume in 5. But I mean, let's consider this, okay? Also, from a channeling perspective, it was very interesting. So just to wrap up the scenario, I want to show you guys what I'm talking about. Just to wrap up the scenario, if this is the impulse, and for the bulls, you want to form a higher low, okay? It's not time yet because this low was made way before the 0.382. So whatever is going to form over here, remember guys, this can still form a very complex corrective structure. This could still do this, okay? Maybe it stops even, it doesn't tap the box, and that's your C. And then it does that. Okay, and then it does that, and then this was a W and it formed an X and it formed a Y. Like, this can still morph into something a lot more complex, and that's the problem with corrective structures, and that's why everyone struggle to trade corrective structures, because you think you're looking at a normal ABC, okay, you think you're going to get the bounce and it rejects again and it takes the low, okay. So they are not easy to trade, but the best way to trade them is to know that, well, I see the reaction, I take profits when we hit resistance. It's the easiest way to trade them. Just get in and take profits at resistance. If you're shorting, you take profits at support because you don't know what's going to happen inside the range. This can still morph into something so complex WXY with a triangle in X. It can, you know, that's what could happen. Anyways, now let's continue. Okay, and I will go through the com section when I'm done over here. Right, Crypto My Matt in the chat section, absolute legend. Guys, if you haven't checked out Matt's channel, go and check Matt out. He's an absolute legend. He does a video update almost every single day. Okay, very different way from trading. Myself and Andy are extremely technical, but I think Matt has this ability to make trading a lot simpler. Okay, but Matt also looks for those bigger swing trades. Okay, where myself and Andy also look for those small little scalp trades on the 5-minute time frames. Okay, very smart man. So the local directional bias is to the downside. All scenarios lead to another leg down. Yes, for now. Okay, so let me talk. Now I need to talk about the bearish case scenario. So let me finish before you draw conclusions. Bearish case scenario, okay, is this one. Okay, and now I just bring you back to the entire structure where you have formed a 5-wave in an A, which means B does not have to tap a flat target. 5-wave A, correct, WXY in B, and this was your C wave. Done. And I'm going to explain to everyone why I have a problem with this issue. I'm going to explain to everyone why I have a problem with this scenario. It's just based on probabilities at the end of the day. But in this bearish case scenario, this leg here to the downside has to be counted as a 5-wave structure, which I can. And this is most probably your corrective structure for 2, and you are absolutely going to smack down here, claim the low in a wave 3, 4, 5. And then after a 5-wave move down, okay, you guessed it, you get a corrective structure back up. So there's still a longing opportunity below this low. And this is why I say, guys, this is not a, you know, I'm expecting a bounce here inside of this consolidation area for the bullish case scenarios. I don't want to be underwater looking for a long over here. I rather want to get stopped out, and I'll look for a fresh long down here. At the moment, my entry is below this low. Like I've pointed out, if I get stopped out, I will look for a fresh long at lower levels. Okay. Well, what are those lower levels? You might be asking yourself. Okay, so let's stick here on the 15-minute time frame. You take a fib from the low to the high of the structure, and you can see we still have a lot of levels here to the downside. Okay, so an interesting zone is obviously the golden pocket. That's most probably where you're going to get the bounce for the 3rd wave. So you can make money with that bounce, definitely to complete the 4th wave, but there's a good chance you're going to claim it again. Maybe 7 or 0.786. Because after a 5-wave move, you still expect a corrective structure up, and that's a trading opportunity. So even if this becomes 1, that becomes 2, and we're going to absolutely tank to the downside in a 1, 2, 3, 4, 5 to the downside. Okay, there's a longing opportunity. There's a shorting opportunity. So there's obviously still a lot that needs to play out for us to determine, well, which structure is going to play out. First bullish structure is a bounce at this zone, where you basically, that's the end of your impulse, A, B, C, or this is an A, B, C. You stop, you form a higher low, and you continue. Or, if I get stopped out, or price just slices through the level like a hot knife through butter, I don't get a reaction, I sit on my hands. I get stopped out of my long. Perfectly fine. If I get a reaction, I'm not sure if I'm very interested in this trade, because I want to see a 1, 2, 3, 4, 5. So I want to see that double bottoms, some bullish divergence between number 3 and number 5. Way more interested in a long in this zone to at least get a corrective bounce back up to the 4th wave. So now you can see it doesn't actually matter. For me, it doesn't matter what plays out. I have a plan. Depending on what structure I see to the downside, I know where to long and I know where to short. But I mean, guys, I'm going to be here every day on YouTube, okay, guiding you through what is potentially developing over here. Okay, so now let's zoom back into the 5-minute time frame. In the most bearish case scenario, okay, if price is forming a wave or has formed a wave 1 over here, it must be said that it is extremely rare for a wave 2 to not at least tap the minimum Fibonacci retracement. And you can see price has not tapped it yet. Now this presents a shorting opportunity for me. If price goes up, and I do love me a range high, okay, when you have a massive fall, well, not a massive, when you have a fall with a high amount of volume, okay, that first high, okay, maybe I need to zoom in there. Okay, let me zoom in so you guys can see properly. This is what I refer to as the range high and the range low strategy. So I take a magnet, take my horizontal, switch it on, and I snap on my level there. Okay, and this is what I then refer to as my range high. Let's see, make this white. Range high. Okay, so in this scenario, okay, I want price to pierce up, claim the liquidity above that high, okay, and reject. And that is my shorting opportunity. But price needs to trade below. That's my sign of weakness. I know where to put my stop loss, and there's a chance that you have a 5-wave impulse, you now complete your corrective structure, okay, you reject at the range high, and then you fall to the downside. Make no mistake, okay, on the way down, there's lots of profit taking areas on the way down, protect position, and so forth. Okay, so definitely a scenario that I'm keeping in mind because I know that there's a bearish case scenario as well. So if, okay, and this is what I do as a technical trader, guys, if I'm very interested in longs in a specific zone, it's always a great idea for me to look for shorts as well to hedge against this long. Or the other way around, if I'm in a long, where can I look for a hedge short? So I can tell you guys now, I'm very interested in a short in this zone because the minimum retracement for wave 2, most commonly 75% of the time, is the 0.382. Minimum target, at least you claim the 0.382. Can it go higher? Of course it can go higher, but that's the minimum requirement. After an impulse to the downside, and I saw Andy spoke about this as well, 75% of the time you at least want the 0.382 to be claimed. Can it go higher? Of course, but at least the 0.382. So I trade with probabilities. There's no short for me in this zone. No short for me in this zone because I trade with probabilities. Okay, so in the most bearish case scenario, first level, okay, is that little range high. 0.382, you want price to find weakness. It needs to start trade. It needs to basically get back into this range. That's a sign of weakness. I know where to put my stop loss. I know where to enter. And there's a good chance you're going to fall here to the downside. If price decides to push a little bit higher, the only other area with Confluence that I have is that fresh daily level that formed yesterday. We have a fresh daily level together with a 0.618. So if price wants to really accelerate here to the upside, okay, that's it. It is a better entry, better risk to reward. Okay, maybe that's your invalidation, or you play an SFP, however you want to trade this. Okay, but I will let the community know if I do enter a trade here or here. I will let the community know if I'm in front of the chart and I do take the short, because as you can see, I'm only in a long. I'm looking for a short. I'm looking for a short to hedge against my long because I know that there's a bearish case scenario that can take us down all the way to $63,000. Easy. And if I get a nice little short entry over here and price does capitulate to the downside, stops me out of my long, at least I have a short, okay, hedging against where I'm looking for my long. That's just the way that I like to trade. It's nice to have those little hedge trades, okay? So that is the most bearish case scenario is you formed a 1, you wrap up the 2, and by all means, guys, by all means, it can literally fall from here as well. It does not have to claim this target, and that's what happens 25% of the time. I'm happy to miss the short, okay, if my technical analysis doesn't align with entering a short at the moment. Okay. Remember to smash up that like button if you guys do enjoy the education. Also, remember that, okay, if you successfully enter a short in this zone and price does fall, it's not guaranteed that you're going to get here. Because remember the bullish case scenarios. This could also be that A, this is your impulse, okay, this is your A, this is your B, and this is your C. It bounces and off we go. And this is why it's so important to take profits. Hope you all enjoyed these updates over here, okay? And these are basically the scenarios that I'm watching at the moment, okay? So we either fall down for the bulls, and you guys can see this is a critical moment. We're either going to fall down for the bears, we form a 1, 2, 3, 4, 5 to the downside, or we hold a higher low. We bounce here at the 786 worst case scenario, okay, and we continue. Where this is an impulse, this is a correction and continuation. Now, I want to show everyone something. Before I go into the comment section, I want to show everyone something that I'm looking at. If, okay, now this is something just, you know, from a technical perspective, this is something that I saw. If this is a and this is a B and this is a C that stopped here, and we are now absolutely going to capitulate, okay, or not capitulate, we're going to take the low, at least take the low. The issue, I have an issue with this being a C wave. Let me explain. Okay, so back here on the 15-minute time frame, and it's all just got to do with channeling. So if I take a channel, let's put a nice little channel here. Okay, just want to make sure that I get it right. I want to make sure that I'm on the right scale. I think it's actually going to be better for me to use the magnets, because there's something that I saw over the weekend. There we go. Yeah, actually, I think maybe I had my, because there was a scenario on the weekend. So let me leave it like this for now. There's something that I saw on the weekend, okay, where from a channeling perspective, if this is your 1-2s, okay, or your 1-2, 1-2, you want your impulse to finish outside of the structure, okay? But there, I see now there's a couple of ways in which you can draw this channel. It's not really clear. But yesterday, when I still had my channel in place, and I shared this on Saturday, I think, I said, guys, as long as price, okay, does not tap the bottom of the channel, up we go. As soon as we tap the bottom of the channel, I think down we go. So from an impulse perspective, something that I was keeping an eye on yesterday is this is your 1 and your 2, and this is your 3 and your 4. That's perfectly fine. And then you form and you finish your 5th wave outside of the channel. But then we tapped the bottom of the channel, we rejected at the top, and we fell down. So this for me was highly likely, or a higher probability corrective than impulsive. And this is why I like the scenario more of this being the 5, this being an A, a B, and a C, or a C to the downside. But what I'm trying to highlight here is, if this is 5, this cannot be a C wave. The C wave has to end over here. But if this is 5, it can't be a C wave. And that's the issue that I have. But now I saw when I was using my magnets, you can unfortunately draw this parallel channel a couple of ways, because you can play around with the pivots here at the bottom, and then you can say, okay, well, if I do it this way, then you have a 1, 2, 3, 4, 5, 4. You did not claim the bottom, and another 5 to the upside. So it's not easy. Okay, it's a little bit like, is this the end, or is this the end? On the smaller time frames, on the 1 minute time frame, you can count a 5-wave structure here. It's not pretty, but you can. So we'll have to see how the structure is going to unfold. But for me, if I have to pick sides, I would say this was the end. This is part of a corrective structure. Maybe this is your W. You do a X, and then you fall down on a Y, you form a higher low, and you continue. If I have to choose, okay, guys. But, you know, obviously the technicals and the price movement is going to show me which probability is going to play out. Now we can go through some comments. Okay, so for everyone watching this live stream after the fact, this is where you can end it, so that I can go and chat to the beautiful community, also hear what they have to say. Dewald, just out of curiosity, how much percentage of your portfolio do you make in a month, and the average number of trades you take in a month, wins and Jack? It depends on market condition and cycle, whether we're in a bear, bull market, sideways consolidation area. I would say I average around 15% a month on my portfolio, and I don't have to be aggressive on my portfolio because it's quite a significant portfolio. So 15% a month on my portfolio is quite a significant amount. Sometimes it's 10, and sometimes it even goes up to 30%. But I would say the average is around 15% on my large trading portfolio. Okay. And what was the other part of your question? And then, yeah, I would say on that portfolio, I take about four to five trades, but I know I only have to take one. Okay, I had an interesting conversation with Matt and Andy the other day, and I told them, realistically, I only need one good trade a month, and that pays for all my expenses, money, buy some Bitcoin, buy some ETH, load up to my spot bags. I only need one good trade in a month, but I usually take about 5. On average, I take about 5 trades. Okay, so some of you might be thinking, only 5 trades in a month. That's nothing. Guys, remember, the more you trade, the more you expose your cash to risk. So I have different portfolios. On my smaller portfolios, like weeks, for example, or BTCC, where I call it play money, but I still apply good risk management. Some of them I'll trade every day, okay, and I'll just stuff around. But on my large portfolio, the one that's paying for me to be here and to eat and to go to gym and to, you know, for all my expenses, I don't F around on that portfolio with 20 trades a week. No, because every time I expose my cash to a trade, I'm opening it up to risk. So I'm happy with 5, 4, even 3 trades on that portfolio per month. But then you look for high probability trades. Okay, you can be very patient. I would love to drop to 62k. Yeah, 62k does look very interesting. 62k, the bearish case scenario, that does look very interesting, and it looks very, that 62k area does look very interesting for a bounce. We're going to claim the lows, and then it whoop bounces to the upside. Okay, that's it. I must say, it is a very interesting scenario, even claiming this low. But you basically still stay, you know, you still form a higher low, and then you continue back to the upside. So I'm waiting to see which one's going to play out. I am in a long. If price wants to make its higher low and continue, then I'll take profits at the high again and at the 0.5. That's my next that's my next biggest profit taking area. When I go onto the 1 hour time frame, okay, my next biggest profit taking area is the 0.5 when I take a fib from this low, this high to the low, 75,200. This is where I want to take majority of my profits. So if this long can hold, this is a very interesting profit-taking area for me. You have these lows, okay? It's also that 1, 2, 3 maximum target for a fourth wave. You fall down. It's also where I'm very interested in shorts. Okay, if price gets there. But if price first wants to move down, before it gets there, that's a new trading opportunity. It's also a better entry and a better risk to reward. Okay. Well, I won't say a better risk to reward because my position is already protected, but it's a bigger move to the upside. Let me rephrase it. It's a bigger move to the upside. But this on the higher time frame, okay, is a very interesting shorting opportunity. Interesting long if you did not catch this long. So yes, Mr. Crypto Big Brains, I agree, brother. I agree with those 5 trades you take. Is that also include trades when you're trying to enter and get stopped out soon after, or does it include all entries with exits? No, that's a good question. Because I usually, from a trading journal perspective, for example, just to give you an example, if I'm looking for an SFP, let's just use this one. Yeah. Okay. Maybe I'm looking for an SFP at the 0.382. Okay. So maybe I played the SFP here at the 0.382. Okay. I got stopped out. Price fell down. I entered again. I still regard it as one trade, because usually when I get stopped out, I get stopped out at break even and I only pay the fees, and I count that as one trade because I was looking for the move down. It's just I didn't catch it here, but I caught it here, and so I look at this as one trade. If I took a loss, then I count it as a second attempt, another trade. But I guess it's up to you how you want to build the rules inside of your trading journal. If I'm looking for the same trade and I get stopped out maybe a couple of times with that same trade, and price eventually moves and I got stopped out at break even, maybe paid a small little fees along the way, I still regard that as one trade. That's not me placing 10 trades. But if you are shorting, you longing, you shorting, you longing, you shorting, it's just trades everywhere. For me, those are multiple trades. Okay, those are multiple trades. And like I said, guys, I do have different portfolios. I do have smaller portfolios like my BTCC portfolio, where I have $55,000 in it or something like that, 55 or 53, where sometimes I do trade a little bit more, maybe one trade a day. Okay. And then I have my large portfolio where I'm very selective about my trades, and each portfolio has its own trading journal. So the question is also, well, which portfolio are you referring to? Okay, with small little trades and scalps, I'm not risking my entire portfolio. I'm happy to risk a $50,000 portfolio to short and long and short and long and short and long. You know, those day scalps inside of the range, I'm happy to take those trades inside of my smaller portfolios. Up and down, up and down, up and down. But in my larger portfolio, I wait. I wait for the planets to align. Okay, thank you. Do you use CoinPanda for tax purposes? No, I don't. I do not. In the ABC scenario, in the 1 hour, is the wave B in? You're talking about on the 1 hour, this? Yeah, does look like the B is in and a WXY. Do I still have it here? There we go. Okay, let me just take this flip out the way. Y was actually there, C was actually there, and then you have W, B, something like that, guys. I'm not gonna go crazy. Yes, so you can label this an A. You have to label it a 5-wave A. You have to, you don't have a choice, okay, in this scenario, because B is not allowed. If this is a 3-wave structure in an A, B has to be a flat, so it needed to come down here, and it didn't. So you have to label A a 5-wave move. 1, 2, 3, 4, 5. It's valid. It can be counted as a 5-wave move. W, X, Y. A, B, C. There's a couple of ways in which you can count it, but this could be the end of your B. Okay, or it is the end of your B. You have the move up in a A, you have a WXY in a B, and now the question is, was this your C? Now that's now the big question, was this your C? And now we're going to fall here to the downside. Because the fourth wave did tap the minimum target here on the larger time frame. Just remember, guys, the fourth wave did tap the minimum target. If this is a 1, 2, 3, 4, okay, or even 4, it doesn't matter. The minimum target has already been claimed, which is the 0.382. So it can either fall from here or it does this. So there's some trading opportunities that I'm still keeping an eye on. Unfortunately, no one has a crystal ball. I have to trade what price gives me. I can't come here onto the live stream and tell you guys, this is definitely going to play out. No, we're going to form a higher low. Definitely, guys, look for longs over here. We're going to go to, I can't. I need to trade price as it develops. I'm a reactionary trader. Ooh, almost fell over that word. I need to see the structure. I need to see the reaction at a certain level. I have to have a plan for a short and I have to have a plan for a long. And depending on where price goes, I can make a trading decision. Because no one knows what price is going to do next. But I have a plan and I can execute on my plan. Interested in shorts, interested in longs. Also, $57,000 or $54,000 area, also very interesting. I think we still have those monthly levels there to the downside. Okay, what else? Possible harmonic in reverse, Osren. That could be interesting. Let's see. I think I see what you mean. I haven't actually looked at harmonics in a while, but this does look interesting. Maybe this one. There's a harmonic as well. 786. There's your harmonic. Okay, you want to see a little bit of symmetry between those. Yeah, definitely. There's a godly. 5-5 or a bat. There's a godly or a bat. You form that little bit of that harmonic. Okay, lower high. You come down. You take the low. Get stopped out. Okay, and then it bounces. Takes the high of C, takes the high of A, and that's definitely a shorting opportunity that I'll be looking at. So yes, there's definitely a harmonic here from a bullish perspective. I think it's also that level that Crypto Big Brains is eyeing myself and Crypto Big Brains. This level here, very juicy level. If price wants to do a 1, 2, 3, 4, 5, very interesting. And then you bounce. The rules for the harmonic is 618 profit taking area. So that's TP1, TP2, TP3, or it could be TP1, TP2, TP3, depending on how you plan your trade and how much profits you take at each level. Okay, so from a harmonic perspective, let's go to the 15-minute time frame. I don't know if everyone is familiar with harmonic patterns. Okay, they do play out often on the 1 minute, daily, any time frame. Okay, so in this harmonic, it's basically the same. You take a fib from the low to the high. Okay, and here by the 786 is usually where your godly harmonics play out. You have a lower high. Okay, it bounces at the 786. If it taps the 0.88, that is what we refer to as a crab harmonic. It's a crabby. If it bounces on the 786, then it's a godly. Okay, but there's a chance if this forms a 1, a 2, a 3, a 4, and a 5. Okay, maybe 3 is going to be a little bit extended. So 1, 2, 3, 4, 5, definitely an interesting zone that I'll be paying attention to. Very interesting. So I'm not sure, Osren, if this is the one that you were referring to. Was there a bearish one? I'm also looking at the bullish one. Okay, that was the first one that I saw, was the bullish one. But I don't know if it makes sense unless I draw it out. The bullish one is... Okay, you make a higher low and you do that. That's your bullish harmonic. Interesting. Okay, you form a higher low. Okay, can you guys see? It's just in reverse, looking at this structure from this pivot. Okay, so if price makes a higher low, now you have a higher low, and now that becomes your rejection. Okay, I can't remember what you call this harmonic, but I was also looking at that one. Right, but very interesting, very, very interessante. Okay, yeah. Is your primary trading technique scalping? Yeah, again, it depends on which portfolio you're referring to. So on my smaller portfolios, I would say yes, I scalp on them. Maybe a trade a day, maybe a trade every second day. Guys, it's very rare that you will see me enter a trade twice in a day. It's very rare. It does sometimes happen where I'm planning a long and it hits my longing zone and I'm in the long. And I was looking for a short and price gets to my shorting zone in the same day and I enter a short. It's very rare that that happens, but sometimes it does happen where I have maximum 2 trades in a day. But usually I would say on average, a trade every second day is what I like to get into. Okay. From a scalping perspective, on my larger portfolio, I would say that's more swing. That's more swing trades, because on this trade, for example, I've been in this trade for 2 weeks now already. Since we were here, I was in at $64,000. Okay, I entered over here at 64. I was here already in the trade. I took profits at the highs. I entered a short over here, rode the momentum to the downside, took profits, added a little bit to my position, got stopped out with profits. Okay, so I've been in this trade for long, for 2 weeks now. So that's not a scalp, that's a swing trade for me. Can you check on the daily BTC? It shows a flag. Sorry, let me just put it here on the screen. Can you check the daily BTC? It shows a flag on the daily. Let's go check BTC here on the daily. Let's use a fresh chart here on the daily. What about this one? Which one is this? That's Bybit. No, that's ETH. This is the this is the index chart. I just want to see why I've got these boxes. This is my bear market and bull cycle. Guys, very interesting discussion. Okay, yeah, it has to be on the log scale though. I'll check that bear flag or bull flag. What did you say? Bull flag. It shows a flag to upside. A flag. But yes, let me just take this out the way. I think this is a discussion for another day. Okay, let me take this out the way. The 4-year cycles. Yeah, anyways, let's go here on to the daily. Choop, 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 choop. Are you talking about, I'm not sure which flag. Are you talking about this? The flaggy that's forming here? Or are you talking about the bigger structure? I'm not sure. 3, Mr. 3, Omo, or More 12. I'm not sure which one you're referring to. Because I know, I don't know if I deleted it. I know that some people are looking at the, was it this one? I know that some people were looking at this. I know some people are looking at that. Which is bearish, by the way. Okay. I don't have to get it perfect, but you get the idea. You've lost trend. And now we're going to fall down. Well, if you want to trade on the weekly time frame, you must probably going to place a trade once every 3 months, once every 4 months. If that's your trading style, well, okay, it's just way more money to make inside of the ranges for me, okay, than to trade the weekly time frame. Not sure if you're talking about this flag. Yes, that's the one. Okay, cool. Yes, I mean, from this perspective is we've lost it, but you have to also consider, you know, we're on the log scale. As soon as you go to the regular scale, it messes up everything. Okay, and I've also seen on the log scale, well, now, you know, there's many trends. That one also got broken. Okay, now, what else is here? Okay, you can see the curvature. You know, you have this like there's no trend even there. There's no trend there. And then price is now doing this. So it's difficult on higher time frames to say that trends are going to play out. It's very difficult, especially on the logarithmic using the weekly time frame. It's not how for me. So for me, it's interesting to talk about it, but it does not give me a trading opportunity. Because what if price, okay, now, okay, you enter on the weekly time frame. You're like, okay, well, now this is the question. Huh? If you take this trade, how do you trade this? That's the question. How do you trade this? You build a short here. Your stop has to go above that wick. Okay, maybe you're planning to take profits here at the consolidation area. That's your trading plan. Or again, my risk to reward doesn't make sense. So from a risk to reward perspective, it's a 1.21 risk to reward. I can't take the short. It doesn't make sense from a risk to reward perspective, because my rules say, well, where do you put your stop loss? It has to go above the previous high. Where do you plan to take profits? We're consolidating inside of this zone over here. It could still bounce, come back up. Now that is a better entry. So, and that's going to take weeks and months to play out. Okay, because if your strategy states that you do not play the breakout, you only play the retest, well, it's not time to short yet, because price could still get acceptance back above, and then that was just a deviation, because you're still maintaining higher low. Yeah, guys, I don't know how anyone trades the weekly structure. So I guess what I'm trying to say is I can't trade this. I don't have the patience to trade this. There's nothing for me to do over here. Okay, this is even from a, you know, your stop loss is 45% away. I can't trade like this, guys. So it's interesting to talk about it, to say, hey, it's losing the bull flag, but so what? So what? Okay, this is where the money lies, is inside of the local structures. That's where I take the longs. That's where I take the shorts. I don't care what the weekly time frame is showing me. Because if this is going to scare you out of every single trade and you don't want to trade and you're only looking for shorts, well, yeah, you've missed out on this amazing longing opportunity where I made a nice decent amount of profits. So it just depends, okay, what you're trading. If you're a weekly time frame trader, good luck managing a 45% stop loss. Good luck. Right, Dewald, I'm still wondering the logic behind your 65k entry. What strategy did you deploy or utilize? I can't think of a strategy or a reason for the life of me. Wow, we got acceptance back above the point of control. That was a good enough reason. Just that one reason alone was a good enough reason for me. Okay, and then obviously it comes with a lot of experience, seeing price action, how it develops. Okay, I can't go through every single detail in my mind, what goes through my mind before I play entry, for example. But just to give you a simple answer, okay, you have this consolidation area, and I know that I knew that this consolidation area was going to give nice support, and then you have that. That was my reason for getting in. Price got acceptance back above. I knew exactly where to put my stop loss. Price was trading above my area of interest. How many times do I talk about this? Swing failure pattern, just on the larger time frame. You dip below the level, you start trading above, that's where you enter, you know where to put your stop loss. As soon as you start hitting resistance, you take profits. That's exactly where I took profits. There was other reasons as well, but that was the simplicity of the trade. You get acceptance back above. I treated it as a swing failure. On the smaller time frames, okay, if I go here onto the 1 hour time frame, there was a little retracement. I think it was on the 15-minute time frame, whatever the case might be. Okay, we got the acceptance back above. We came up and we came back down. And I was just like, well, I want to get the entry as close as possible to this line because I was sleeping during all of this. And this is where I entered at 64,000. That is where I entered. So on the higher time frame, I was treating it as a bigger reversal back to the upside. You grab the liquidity, you're trading back above. I wanted to get an entry as close as possible to this line. When we started retracing, I entered. I knew exactly where to put my stop loss. When price started moving up, I de-risked my position and I took profits at the high. When we hit the 0.382, I think that's the easiest way for me to explain it. Hope that makes sense. Mr. Momtaz, I hope that makes sense. Okay, I've unfortunately run out of time. Thank you so much for joining the live stream. Remember, guys, I give the community updates throughout the day. I'm sure Andy's going to give some updates today, updates tomorrow. If I do enter a short or I do plan to take a long, take some profits from my trade, how I manage my trade, everything gets updated here inside of the community. Just DM me the word access on Telegram. Link is here down in the description. Have yourselves an amazing Monday. Let's see how this week plays out. I will be here tomorrow. I will be here on Wednesday. I will hold your hand throughout this process. Unfortunately, I spend most of my time in the community when I'm not here on YouTube. Have yourselves an amazing Monday. Until the next one, cheers for now.